With over 23 years of experience in the stock market, I'm Anthony Calhoun. Welcome to Simplified Profits, where we like to keep things really simple. Today, I want to go over some changes we're making to our transparent account. So, we are switching up a few things with the account, and let me kind of just go over that. The first thing I want to say is this is going to be a trading only account. Okay, at first we were going to make 20% long-term positions and then trade 80% of the account. But what I hate to keep doing is when we get down on a trade, we end up selling a long-term position to free up cash flow and average that trade down. Okay. I don't want to keep doing that. And that's why I've always kept two accounts. Okay. So I usually keep a long-term / income account, and then I keep a trading account, and they don't interfere with each other. Okay. And if you check out our long-term positions, I wish they were still in here. We had BWXT, we had GTBIF, the list could go on. Some really good long-term positions that we'd be up quite a bit on if we left them in there. We do have them in other accounts that we basically just add to on pullbacks. So I don't want to keep having to do that. So we are going to focus on one trade at a time on this account. And if you want to see kind of how I handle my long-term investment account and my income account, pick up the original copy of Simplified Profits, not the Trader's Edition, and just read through it or check out some of the beginning videos on the transparent account. Or actually, you can go to makecashwork.com and it's really all laid out there. So check that out as well. So URA has been an annoying trade to say the least. Really entered it because it's getting kind of antsy. Market has been running, hasn't given me a pullback in a while, and it was one of the very few bullish long-term ETFs that came up on a scan. And actually just Wednesday, we were thinking about Wednesday. I think we were down maybe 0.5% in this trade, and we were going to sell. I was wanting to sell it at a 0.5% loss, jump into triple Qs. Well, TQQQ, the leverage version, which we just had my son do. He just entered that Wednesday, had a 10% gain overnight. Shout out to him. His first trade, just turned 18, opened his own brokerage last month. That was his first swing trade, crushed it with 10% overnight. May have him on here soon, the podcast, just to kind of pick the brain of a young investor, see how he feels about investing. He's pretty excited about it in swing trading. But anyway, I just hate taking losses. So I didn't want to take a loss on that on Wednesday, because what happens is you get a mindset to where you just cut losses and move to the next trade, cut losses, move to the next trade, and that will eat a trader's portfolio up. And I've always done better when I basically got out of that mind frame. Okay. If you're in that mind frame, you've probably taken a bit of losses that have impacted your portfolio greatly. And honestly, if you look back at those losses, you probably could have held on a little longer and not taken a loss, unless it was a real piece of crap. I mean, I don't know what you're buying out there. I don't buy garbage. So that's why I try not to just sell it and move on to the next one. All right. So let's take a real quick look. If you look at, I think we bought here the first time, and then we've just continued to scale in. Now here, it's dropped almost 5%, 4.43%. That's basically what we're down. I mean, may have been like almost even on Wednesday. But anyway, it's been annoying. I'm hoping it will. Now here, my outlook on nuclear energy hasn't changed. Nothing has changed from what I've seen in the news. There's still tons of countries wanting to increase their nuclear energy output, dumping tons of money in nuclear energy. So yeah, it's still, to me, that and cannabis, probably one of my favorite long-term sectors. Okay, BWXT, that's been a real winner for us. We started building that position back last January. I was telling people on StockTwits, even on my website, makecashwork.com, to call a buy on it. Of course, buy at your own discretion. And I mean, all my accounts are up over 50%. I want to say last time I looked on this, but it is Nuclear Energy Company, and what I like is the Trisofuel Project Peel. That's what caught my attention last January, and we built positions all year last year on every pullback, and now we plan on just letting them ride. But nuclear energy in general, this is a nuclear energy ETF we actually had long-term position in. All of these are coming up. This is coming up in bullish, oversold. I mean, they got beaten down here recently. This is a junior miner. But once again, my outlook hasn't changed. So technically, I'm hoping it turns around where it's at, right? I'm hoping we can, originally what I hoped for was we get a good 10% swing there. By that time, SPY and the market would have pulled back. We could have locked their profits in there, jumped in one of those trades, moved on with their life. But of course, this had to be stubborn. Just kept dropping here. I mean, it's down about 8% from our original buy. And it could carry momentum down to the 200-day moving average. Now, one of our rules is if it breaks the 200-day moving average, we're out. But I'm not going to do that when I'm down 5% if I can strategize trading on another chart. So what I mean by that is the weekly chart, it was oversold. It's got to pull back. It will probably be, or it was overbought, had to pull back. It will probably be oversold soon, maybe next week. Stochastics are usually about, on the daily chart, a day behind, and on the weekly chart, about a week behind. Now the monthly chart, if you look at that, it's due for a pullback. Now it's still got, I think last time I looked, 41 bars before it even comes up with right there is 159 bars. So 41 bars before it even comes up with a 200 bar moving average. It could pull back some more. Nobody really knows. But to follow my rules, if it breaks this 200-day moving average, I'm going to trade it based on a weekly chart. All right. And hope that don't happen, but it's possible. Now, the bad thing is we don't have any more cash flow coming in this account for another 2 weeks. So we're just waiting it out. I will probably, actually, I will. So I'll do that now. I'm going to set an alert. If this crosses under, that way I know, or if it's overbought, I know to sell. Because I'm probably not going to be watching it next week. I'm just, looks right. I'm just going to be grinding on my day job, hustling in some other areas, probably focus on some other accounts as well. But this account, I really got nothing to do to it until this baby either breaks up for profit, which we're going to set another alert for overbought. So hopefully by the time it's overbought, we are up on this turd 10-15%, and I'll show you. Okay. So we're down about 4.3% right now, 4.4%. If it goes up to its previous highs, we're talking 20%. We could easily lock in 15% gains. Say it goes up 15%, and we just want to lock in 10% gains. We'll make that call when the time comes. I mean, just at the beginning of January, this thing ran 18% in 8 days. So anything's possible. This thing could take back off next week, which I hope it does. But if not, you always got to have a strategy and an exit plan for profit. At least that's how I roll. So in 2 weeks, we'll have enough income to put more in this position. Now, if by that time it's under the 200-day, I'm going to trade the weekly chart. And depending on what the momentum looks like, I'd hate to do it, but I might wait another month and just take two. I probably won't, but take two chunks of income and buy at that time. But I don't think it's going to take that long, ladies and gentlemen. But you have to be prepared to make profit on your trades. Okay. Stay tuned to find out. This may wipe me out, but once again, I still have a good long-term outlook on URA. And if it looks that bearish, I will probably let it ride. If it like straight turns around, as long as it don't break under the 200-day on the weekly chart. But I'll grind a profit out of this trade. Always do. But what we could do is, let's say 2 weeks from now, if the rest of the market's pulled back, I may put that money to work in another leveraged ETF and then swing that profit. I'd like to do one trade at a time, the way our cash flow is right, but we'll see what happens. But I still like the sector. Nothing's changed. Let's jump over to the position, and you can kind of take a look at where we're sitting on that. All right, so this is our position. We have multiple buys. I mean, you can tell we've been buying the crap out of it. Right now, average price paid, $28.21. We are down 4.4% basically. We've got 186 shares, and we are 99.5% of our portfolio in this. All right. I hate seeing that unless it starts going up already, but it is what it is. And we'll be able to enter again in a couple weeks if need to be. Hopefully in a couple weeks we're taking profit, moving to the next trade. Our account value, 5,000. We did have income hit on Friday. That's why our next income isn't going to hit for another 2 weeks. And right now our performance, which I didn't take a screenshot on that, but we were up about 9% for the year. And I think right now we're like 5 or 6. We are basically, I think, 1% under the NASDAQ 100. But when we lock in profit in this swing trade, I'm sure we'll be doing better than the market again. But this is where we're at. Now let's take a real quick look on the transactions just so you can see. All right, so this is the income, 744.83. So that got added to the account on Friday. And you can see our IBM as well, 185. So that was basically a wash. If you take a look at our other videos, I didn't take a screenshot of the sell for you guys today. But if you take a look at any of the other transparent accounts, you'll see we entered at 185.40. There wasn't any transaction expenses. So, I mean, I think we made 20 cents or something stupid. Now, we could have held on and made more than that because I think IBM did close up pretty high. And that's something, like I said, I want to hold that. When I added that, I also added it in 4 other accounts, custodials and my long-term account. I think it's a great long-term play. We just needed that cash flow to lower our average and our trade. So, ladies and gentlemen, that is where we're at. If you have any questions, any feedback, leave it. Make sure you subscribe so you don't miss out. I'm sure you want to see how this ends. And I'm out.